What's going on, guys? It's GBP baby. Welcome back to another video. Hope everybody's doing well, and hopefully you've watched yesterday's video. If you haven't yet watched yesterday's video, do go and check it out before you watch this one, and let's dive straight into things. So we're going to be starting on the dollar as per usual, and you can see that we have had a huge, absolutely huge gap in the new day. Price traded up into this range and then used it as resistance, which is a fair value gap, I believe, from the 4 hour or from the daily. I did speak about this yesterday, so let's take a closer look at this. I believe it must be the 4 hour. Yep, 4 hour fair value gap. We dropped below it, and then you can see our price used it as resistance and then continued to trade on lower, just as anticipated. So if you remember in yesterday's video, I was expecting us to fill this fair value gap, and then I was saying that it would come down here at a reach. The fact that it went straight down here, literally skipping the original fair value gap, is saying a lot about how bearish, heavily bearish price action is right now. Obviously, with all the geoeconomic news and such that's going on around the world, this is having a huge factor on things. However, it's interesting to see how aggressive it is falling to the downside. So with that all taken into account, moving into tomorrow, especially when we've had 2 strong days of heavy downwards price action, I do expect us to stay in the consolidation, and we are probably going to stay range bound. So as much as I may want to see price trade lower and be bearish, expecting price to maybe run down into these stops below here, I'm not anticipating this to happen on Wednesday, and I do think that we're probably going to stay in a range. Now, where is that range going to be? Well, personally, I don't recommend trading tomorrow just because of how range bound I'm expecting it to be. But I mean, like, between this high and between this low, I doubt price is going to necessarily leave this range. We might find that we climb back up into this inversion fair value gap, so to speak, and then just stay within it, and then we'll expand at a later point or next week even. But generally speaking, I'm not expecting much at all. I don't think it has the energy to do it. As in, if it's going to, then I think some more seriously high impact news will have to occur, which is kind of scary considering the current, geopolitical events which are happening. But my point is, we've moved a significant amount all within 1 week, creating a very strong swing high, ran out stops below here, came down into this bullish order block, and now I think we're going to likely return to some kind of equilibrium. So if we just clear up a few things, I want to get rid of this for now, I want to get rid of this for now, I want to get rid of this for now, I want to get rid of this, I want to get rid of this, and let's get rid of this. So now really all my eyes are set on is this 4 hour gap, because the fact that we've gapped through it is very interesting to me, and the way that we've used it as resistance is also very significant. And then I want to talk about this 1 hour bullish order block, which we've traded very deeply inside. So the fact that we came down into it, you can see that we have created a swing at the 50% level of it right here, and we've turned on a dime. So volume is respecting what we call the mean threshold of this bullish order block, and now price is closed on an hourly basis outside of it. So as far as I'm concerned, if price is going to continue trading, it's likely we are going to see us maybe try and fill this gap up here. In fact, let's get rid of this for now, and we might be on a little bit of a bullish return in terms of going back to equilibrium. So if we look at the current trading range and look at this high to this heavy low, I'm looking at this 50% level as a draw, not as a target, but as a draw on liquidity, as in price will likely want to start drawing up here. Assuming that it continues to respect now the 25% level of this bullish order block from the hourly, which we traded down into. So let's get that delineated as well, and that gives us a range as to where the lowest I'd want to see price trade tomorrow is. So let's get that drawn out like so. We'll make this blue. That's a nice blue. Looks a bit weird on the red. In fact, that's hurting my eyes. There we go. And then, like I said, as soon as, if price manages to take out this swing high right here on the hourly, then it's likely we can start looking at this high, and then this gap which we have. So I'm going to draw out this gap as a fair value gap because, well, that's what it is. I'm going to make it orange, remove the 50% level, and then we can write hourly volume imbalance as a potential target. And this is all assuming that price is willing to continue to trade higher. Now you'll see that there's a small fair value gap right here. Ideally this stays open, but if price taps into it, I'm happy for it to tap into it, but ideally it stays open. But it might want to use this, it might want to treat it as a normal fair value gap where it taps into it, maybe trades to the 50% level and then trades on higher. So we'll take that into account. But on the 15-minute, you can see how we've turned at this 50% level and price is just rolling on over. So like I said, as soon as we take out this swing high, I'll be happy to expect that price is going to try and run out these stops above here and trade into our 1 hour volume imbalance, so long as we continue respecting this hourly fair value gap, or hourly bullish order block, sorry, because when we have a strong reaction like this, also the failure to take out this low, it's done this intentionally. It's specifically left this low intact because either A, it's going to come for it later on in the week, or B, it's going to come, like, my point is it's engineering liquidity. So this low would have been taken if they're ready to take it, but they're not. So what they're going to do is they're going to send it back up to some kind of level, which, like I said, is going to draw towards equilibrium of the range, and this will give us a nice draw for us because it's a clear volume imbalance. So this is the nearest point which I'd say price needs to refer to if it's going to refer to anywhere in the premium. Assuming, again, it stays above the bullish order block and it wants to continue to respect it, we should be able to see it crawl up. Now, it may be very high resistance, and we can see that because of how high resistance it was on the way down in this section, which is completely fine, but nonetheless it may stretch price to try and get up there. And again, there are relative equal highs, so above here, 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 and here. So there's reason as to why people would be positioning their stops up there, which we would with them want to sell to as smart money. So with that all taken into account, let's head on to, in fact, I did say today I was going to look at the daily dividers. So let's take our time with this and we'll get those delineated. So this is Tuesday right there. And then we have Wednesday, and then we also have Monday and Sunday. And why this is going to be useful to us is because we can look at Sunday opening prices and where we midnight opening prices, and where we are in relative to that, in relativity to that. So this is the Sunday opening price over here, which is way above our means. But then what's also significant is going to be the Monday and Tuesday opening price and whether we're going to be trading above it or below it. So let's just delineate this Thursday like so. And what I'm going to do is I'm going to draw, Wednesday, sorry. And what I'm going to do is I'm going to draw out the Wednesday opening price, which is right here, the midnight opening price. And I'm going to drag that right through. And as far as I'm concerned, I'm looking for price to get above that. And once it's above it, that will again add more comfort to my position in expecting it to then start drawing to that equilibrium point. The reason for that is because look at how it's treating it currently. It uses as a barometer, we use it as resistance, we come down. Again, it fails to take out a significant swing low. So there's failure here for a reason, and again we've had a nice strong reaction off the back of it. Now this is a good moment for us to look for what we call divergence. Let's see if it's here. It's not on pound. Is it on euro? And it's not on euro as well. So we're seeing price in unison with each other in terms of dollar making higher lows, and then GBP is making lower highs as well, which is nice to see. So that's all in line, but I'm just trying to see if there's any other forms of potential divergence which should help us, and not particularly. Okay, so we'll come on to that later, but my point is, again, I'm looking for this fair value gap to get respected basically, and then I'm looking for this Tuesday opening price to be traded above as a target, and then running into these highs potentially as a target as well. And then there'd be a level of mitigation here. We've got a low, high, higher low, and prices continue to rallying. So if it's going to come back into this range, you'll see that also matches nicely with that mitigation block. So there's reason as to why we want to tap into this fair value gap potentially as we move into Wednesday. And then the lowest I want to see price trade at the most would be below here. So let's head on to GBP USD. And I'm going to quickly do the same thing. I'm going to delineate each day. It'll be quicker for me to do on the hourly chart though. So let's get Tuesday there, Wednesday, and then we want Monday as well. I'm not too concerned about Sunday just because of how much we've expanded, and you can see, let's go to the daily. You can see how much expansion we had today, just as anticipated. So if you watch yesterday's video, you remember me saying I'm expecting us to trade down into this range, and we tapped into it, as you can see right here, and then price just blasted off and ran out our buy stops. This was my original target. We traded right through the fair value gap, which is now used as, as a trampoline to keep pushing price higher, and we ran stops above these highs. So much more expansion than anticipated, but nonetheless still very fascinating. And again, if we're expecting a return back inside of the range, in fact, this is where divergence might be apparent. Yeah, so if we're expecting price to return back inside of the range, we want to be looking for potential bearish targets and for price rollover basically. But where we see divergence right now is that pound has run out these highs, so it's made a higher high with all that bullishness, whereas dollar has failed. Dollar has failed to make a lower low. And again, remember I was talking about this failure swing. So we're seeing strength in dollar, and we should be seeing the same in pound, but we're not. So what we'll find is that pound might be acting as what we call the sixth sister, and we'll have to do some catching up. So we might see some quite large expansion on pound as it starts to pull back, considering it's run out stops here, but dollar's the one that's showing the strength. So this is classic divergence, and it'll be interesting to see how this plays out moving into tomorrow. But that should, let's add euro just as our deciding factor, and that should support the idea that price needs to trade lower. And you can see that euro is also tapped in. So dollar's the only one that has failed to take out these significant swing lows. So what's going to happen is the currency should have to catch up with that, but we'll look more into that in a bit. So we ran out those stops, nice, and then we've had this reversal. So I don't want to call it a full-on reversal just yet. We've just come off of it, so we're probably going to mess about a little bit for a little bit longer. I'm going to get rid of this for now. I'm going to get rid of this for now. And like I said, I'm looking at the current trading range. So I'm looking at this low which it created this week, and this high, and then my draw on liquidity is going to be the 50% level. I want it to come back to equilibrium. So that's pretty much already delineated with this high which we tapped into gorgeously. And then I'm looking at the Tuesday opening price, and I'm going to drag that right through, because moving into Wednesday we can use that. So let's go to the 15-minute or the 5-minute even, and you can see our price traded on higher, creating the high at 10.25, and then we've just been consolidating as it's been rolling over after running out stops. So again, if we see dollar continue to show that strength, I'll be looking for that Sunday, these relative equal lows specifically to get taken, and then even more specifically, and this is where time becomes an important factor, I'll be looking at the Asian range. I'll be looking at the Asia range of Mondays. Let me say that again. More specifically, I'll be looking at the Asia range lows to be taken. Now, if you've been watching me for a while, you know I always talk about the Asia range. If you want me to talk more on this, do drop a comment below. But what I'm saying is that because we haven't yet tapped into that Asia range low, which is from 7 a.m. till, is it midnight? I'm going crazy. I think it's 7 till midnight. Nonetheless, I'm looking at these lows specifically as a target for price on the south side, assuming price is going to trade lower. So let's get that delineated. And what you'll find is that if you study price action the way I have, you'll find that the Asia range, the highs and lows tend to get taken off the Asia range each day, but because of how bullish we've been, prices failed to take out the high and low of the Asia range on Monday. So that means there's liquidity residing below there, and price will likely want to refer to it. So I'm going to be looking at this as a target moving into Wednesday and Thursday as to where price may want to draw to, assuming we are bearish. And that means my setup will ideally form again within the Asia range that's formed today. It's getting complicated. We're getting really advanced here, guys. And then I'd want to be going short at the beginning of the day, basically above the Wednesday opening price, with the expectation that we can run down into this. But yeah, here's an example of both sides of the Asia range getting taken. We look at 7 a.m, midnight, ran the highs, ran the lows, and then expanded. Here, this didn't happen. Because of how bullish we were, we opened and started trading higher off the back of the Asia range. So there's still liquidity below here that needs to be grabbed. And if this is a reversal off the back of running stops, which it very well could be, this will be the first calling point, which I'll be looking for. But yeah, I'll talk more on this tomorrow, so do turn on post notifications. This is where it gets very technical, and where ICT concepts can be really useful if you know how to use them and how to apply them. Remember, the rules don't always necessarily apply, but what I'm saying is that this is what I'll be looking at specifically as a target if we are bearish, and if my setup forms around 2 a.m, 3 a.m. London above the midnight opening, this is where I'd want to be seeing price draw to, especially with there being high impact news at 10 a.m. I'd like to think if we're not there by then, that's when I'd want to see it get targeted, assuming this is a reversal on the back of it, because I doubt price is going to keep pushing, especially after running these stops. So that's just something to take into account. But it all depends, again, after the Asia range is formed and moving into London, early hours London, how price is looking. So that's going to be everything on GBP USD. I hope that makes sense. I know that's complicated, guys, but if you've watched my backtesting videos, you'll know what I'm talking about. If you've watched my live streams, you'll know what I'm talking about. And if you have any comments, don't hesitate to drop them in the comment section or in the Discord. We have lots of traders in there. So finally, let's finish up on Euro USD. What we're going to do is do the same thing again. We're going to be looking at the daily dividers. But look at this beautiful delivery to our buy side target, guys. I spoke about this yesterday. I said I want to see this get taken, and I want to see this get taken. First, I wanted to see, let me see. Yeah, if you've been watching me this week, you'll know that we were expecting this. So it's nice to see us run both targets. Again, I didn't anticipate both necessarily to get taken, but these relative equal highs were certainly a target, and it ran through it like butter. Like butter, ran both stops, so very nice to see. And now we'd expect some kind of return to equilibrium, as I was saying. So let's go to the 1 hour. Let me just quickly get my daily dividers up, as I was stating. So we have Tuesday. Excuse me. Oh, we have Monday. And then we have Wednesday, which is tomorrow. This week's going pretty slow. And then we have Thursday. And similarly, now that we ran these stops, if price is going to trade lower, what we're looking for, again, I'll be looking at the Asian range. But here's an example of what I was talking about just now. Both sides of the Asian range between 7 p.m. have been taken. We ran the highs of it, we ran the lows of it, and then price traded higher. So now it's in a bit of consolidation. So both sides of Monday's Asian range has already been traded to. So that means if we are going to be bearish, I'm now looking for a more deeper discount on euro. So I'll be looking at the sessions which happened. So maybe between 7 a.m. and 10 a.m. and then I'll be looking for liquidity that's residing within those ranges. So if we go to 7 here, and we want to look at till 10, which is what we call New York session. And then you'll see that obviously these stops have been untouched. So if price is going to reverse, I'm going to be looking down here for euro. So be expecting more expansion on euro, which is interesting, but it's a little bit more complex just because obviously it's doing one thing on pound but not another on euro, and this is typically the situation. But after seeing so much expansion, again, I wouldn't be surprised if our draw next is going to be the 50% level. So to be safe, what I'd simply do is just mark out the 50% level off the current trading range and use that as my draw liquidity for now, assuming price does want to remain bearish and roll over. So this basically, I'm looking for price to start heading down towards here now and run out these Tuesday lows which I've engineered. So yeah, very interesting. Euro's a lot more consolidated today, like a lot of back and forth price action, but obviously putting in orders, and the fact that we traded off Sunday, remember, and we've only traded higher since Sunday. There is a lot of possibility that price will eventually want to get down here, maybe moving into Thursday and Friday into the deep discounts. But this is assuming we continue to respect the current trading range we've created. So looking at the way we traded here, higher, lower, lower, high, and then lower, high again. I'm looking at this currently to hold price, as far as I'm concerned, if we can remain below the 50% level of here, then we should get some very aggressive movement to the downside. That should set us up nicely with a nice clean sweep into sell stops. As in, if we stay below here, I'll be happy to look for shorts with the expectation we can go for Tuesday's lows, the 50% level of the current trading range, and at a stretch maybe this week into these lows, but that would be very much a stretch. So that's going to be everything, guys. Very detailed explanation today. If you prefer these kind of videos, do let me know. Don't forget to drop a like, drop a comment, smash subscribe, join the Discord. All the links from the description, and I'll certainly be catching you guys tomorrow. Peace.